So it is tax time. Uh, if you are doing this as a hobby, or if you were doing this as a business, either way, as far as the government is concerned, you owe them money. So um, when you start producing animals and selling them, you could probably get away with, if you're really just doing this as a hobby, you might be able to get away with not filing taxes. But anybody can get audited. So, regardless if you're a business or a hobby, you can be audited. And they're going to see the income coming through to your bank account. So, regardless of if you're taking money as friends and family or what, it doesn't matter because the money's going to be coming into your bank account, and the IRS will see that. If you're audited, they're going to see the money coming in. You're not going to just be able to say, "Yeah, your friends gave you all this money." So, and if you're a business and you're excluding anything you're taking through PayPal goods and services, and you're audited, then really, actually, you're just avoiding taxes. Um, it's called tax evasion. So you can get in some deep shit for that. So now, what's the difference between filing taxes as a hobby and as a business? If you file your taxes as a hobby, you can't write anything off. So there's really, and I know we all call this a hobby, but realistically, if you're selling and you're making money, then it's a business. Um, Now, the IRS and the government, they don't want to give you all those good benefits if you're not um, if you're not paying them. So when it comes down to it, when you first start your business, and you still have a W-2 income, you can write off a business loss and take back some of your taxes that you paid out of your W-2. So let's say you make 50 grand or 60 grand a year from your job and you paid the government, I don't know, let's say 5 grand in taxes. Um, well, if you write off a loss, a big enough loss from starting your ball python breeding business, you can take back a bunch of that money, even potentially all of it, um, for your first couple years. The IRS will give you 2 or 3 years writing off a loss before they're going to look at you and say, no, you're a hobby because you're not making money. And you don't want that either. So your best bet is probably to write off your first 2 years at a loss. So when it comes down to this stuff, you're going to want to use a tax preparation software like TurboTax, um, uh, QuickBooks. So TurboTax owns QuickBooks. So you're going to want to use something like that, or spreadsheets, or maybe a different software to keep track of everything. You want to keep receipts. If you buy a snake from, let's say you buy a snake from me, get some sort of receipt. I can, uh, if you, let's say you pay through PayPal, you'll have some sort of a receipt from that if I send you an invoice. So, so stuff like that, and then you can depreciate your snakes. You can depreciate all the racks, all your equipment. There's a lot of stuff that you can write off the year that you bought it. Actually, I don't know exactly if it's something that uh, is going to be sticking around, but I know there's like bonus depreciations and stuff like that where you can write off things in the whole year that are over $2,500. Um, I don't remember exactly how that works, but I know anything that's under $2,500 you can write off the full. So that snake or that equipment, that piece of equipment, you can write it off. The entire $2,500 or less that first year you bought it. So, um, when you first start out, you're going to be buying tons of stuff, so you're going to have a business loss. So those first couple of years, you write off your business loss, take back, let's say you typically file your return and get back a couple $100. You can get back a few $1,000s. So it makes a lot of sense to do that. And then, and then you're legit, and you don't have to be an LLC to do this. Some states you might have to file a LLC just to do business in the first place. I'm not sure. My state, I can file as a sole proprietor, so everything passes through right to my personal tax return. But you might also want to be setting up yourself a business bank account. You can get a business credit card, or if you can't qualify for a business credit card, you at least keep one personal credit card that you do nothing personal with. So that's a big thing right there, is separating your personal and your business banking. So even if you're not gonna start a business bank account, you just better make sure that you can keep track of everything. So like I said, you have your PayPal. Do nothing but business with a PayPal. If you want to have a personal PayPal too, you better have separate PayPal accounts. If you have a Cash App that you're taking money in, take nothing but business. Don't commingle all that stuff. So, whatever form you're taking your money in, PayPal, Cash App, Venmo, just make sure that you have a separate personal account also if you're using one of those services for something that's not business related. What else? So just keep good track. I use QuickBooks. So you're gonna want to use QuickBooks and keep receipts. Track everything. When you purchase shipping labels, it all has to go into QuickBooks. Everything. If you're going to Tinley, you can write that off. You can write off your hotel, your food. You can't go like stupid and be all extravagant, but you can write off meals. You can't write off alcohol. You know, talk to a CPA is the best advice I can give you. Um, Find a good CPA. If you do your taxes yourself and you know what you're doing, then whatever. But you like I said, you can write off your hotel. You can write off your ticket to Tinley. You can write off the food while you're there for the weekend, and then write off the snakes that you purchase. Even if you don't buy a snake, it can still count as a business. Kind of like almost like a business meeting kind of deal. So, keep track of everything, because your first couple years you'll write off a loss. The next few years after that, you'll show a little bit of profit. You could bring in 40, 50 grand like me and be paying taxes on $5,000 for the first couple years. because you're going to have depreciation carrying over year after year. You're going to have all kinds of expenses. You're going to have, and then you start looking at situations like, because you're keeping track of everything in your QuickBooks. So you can be looking at situations like, oh shit, it's like November, December, and the year's getting ready to end, and you realize how much profit versus expenses you have. And let's say you got a little bit of money in the bank. You've been thinking about that snake. You've been thinking about, oh, I need another rack. Well, a lot of times the best bet is to pull the trigger right there at the end of the year, and get yourself a nice little end of the year tax write-off before the next year starts. One thing that I do is, while everybody is sitting here doing 50% off and trying to give away all their animals at the end of the year for Black Friday, I don't do that. I'm not running sales at the end of the year. I still sell animals through November and December. A lot of times I even have people coming on Christmas Eve to pick stuff up from 4 hours away because they want their animals for Christmas gifts to give somebody, and they can't get it shipped. You know what I'm saying? And I'm not giving away my animals for 50% off at the end of the year. Because I'd rather wait until January 1st to start selling those animals and push my tax burden off a whole nother year. So if I'm going to sit here and give away everything for, and sell, let me hurry up and sell 30, 40, 50 animals in November, for 50% off, and then I got to pay taxes on all that a couple months later. I'd rather push all that off in a whole nother year and wait until January, and then start posting sales, then start posting some auctions. Besides from the fact that it's going to be hard to ship these animals in the first place. So I'm going to sit here, sell all these animals for 50% off, or auction them off, or do all this stuff, do all this actual work, hustling to make these sales, to give away my animals for less than I can get otherwise. And then I'm going to have to hurry up and pay these taxes right away. I just filed my tax return. I don't wait until April. I don't wait until, I usually do it. I usually start getting things together in January, and I usually file it right around the first week of February. As soon as I know that all the, that all the new tax laws are in place and everything's all good, and that I'm good to go, and I have all my information,